Family, this is your brother in the kingdom, Emmanuel Destiny. Welcome to yet another valuable video in our Forex Beginner series. And today we're talking about a very paramount, important subject to many traders, as you can see by the title. We're talking about what is pips, and I just want to dive straight into it, guys. And we just want to be 10 minutes on your screens. I know I've been saying that, and we are going just slightly above, above the time, but anyway, we're just gonna stick to it in this time. And of course, because we're talking about pips, we're just gonna cross all over, in terms of maths and using a bit of those calculations, and it's gonna be a bit hectic in terms of numbers, but I want you to stick by it, even though it can sound a little bit hectic, because we're just talking about a lot of numbers, but you just gotta get through this video in order to be able to calculate those pips and able to understand what is actually a pip, even though other stuff we're gonna get into it in other episodes. But some of you have heard words like pips, piplets, points, lots thrown around on this channel or on other forex channels before, and it's very paramount that I can make you understand that and not just conclude that because you're watching this video or our channel you know exactly what's pips. What is pips actually? So pips, it's the word percentage in point, and it simply means it is the unit of measure to express the change in value between two currencies. So that's actually called pips. If the Euro USD moves from 1.1050 to all the way from 1.1051, that means that it is 0.001 USD rise in value is 1 pip. Okay, so you can hear, guys, the numbers are just a little bit hectic onto the ear, but again, you can just simply pause and read through and listen to what I have to say. I might say a few things that I've not written on the screen, so it's quite important that we can listen attentively, guys. This is the most important episode so far. Okay, so pip is usually the last decimal place of the price quotation. Most pairs go up to 4 decimal places, but there are some expectations, like the Japanese yen, they just go up to 2 decimal places. If you've been in this trading game, you know what I'm talking about. If not, don't worry, we are plugging you and we're laying the foundation for you on this channel. For example, the Euro USD, it is 0, okay, 0001, or for the USD JPY, that is 0.01. So that's the decimals there, or rather the pips that you can see. Now we want to get into another subject or another subtopic, piplet. Some of the traders may not actually know this. So there are forex traders that quote currency pairs beyond the standard of just 4 or 2 pips. Decimal places can even go up to be quoted as 5 or even 3 decimal places. So for the 3, that goes for the 2, that's normally quoted as 2, like your pound pairs, or for the 5, that's your 4 decimal places. Okay, so this actually 5 and 3, they're actually called fractional pips, so also known as points or piplets. So you may see this when you're trading NASDAQ or USD30 or German 30, because they're indexes, so they move in piplets or points normally, or the word there, it's fractional point. So if the concept of a pip isn't already confusing enough for the new forex trader, there's a lot of people when they're trading indexes and they have not laid the foundation of knowledge as of like right now, as you're watching this, it gets a little bit confusing exactly, and they lose a lot of money because they don't understand how much they're actually trading with. Okay, so let's try to make even just less confusing and point out, or rather get to the point here of points and piplets, or rather fractional pips. And basically, to understand that, especially when you're trading NASDAQ or indexes, right, CFDs, it is equal to the 10th of a pip. So that means that 1 pip is equals to 10, or rather a 10 right there, or a 10 piplet, that's a pip right there. So if you're trading NASDAQ, now you know. For instance, if GDP USD moves from 1.30542 to all the way to 1.30543. As you can see, the only number that changed there is 3. That means that it moved quadruple 01 USD. That means that it actually just moved 1 piplet higher. As you can see, that's 5 numbers there. So we're talking about piplets. That's why if you notice, currency pairs that have piplets, they pay a little bit more, like your pound pairs and your gold pairs. A lot of people like it because they pay a little bit more than your slow Euro USD or USD JPY. You get me? Now let's make you understand, even on a primary level. Some of you guys just remember this formation. As you can see, we have the gray number there, which is the units. Okay, so it comes as 0.2 pips, and then of course we have there when it comes to the other number where we have pips, so it stands at 8 pips. So we get to it being a whole number or a natural number. Then it gets to the other dead one, which is pink there, 30 pips. So that's where we step into it being tens. Okay, then we get to the yellow number there, which is hundreds, so 500 pips. And we get to where it says now it's 1,000 pips or 1,000, then of course that's 1,000 pips. After the decimal, we can talk about 10,000 pips. So that's why when you're trading Nasdaq, you'll notice that most of the most of the numbers are before the decimal. So you will hear us referring to 10,000. It moves 1,000 pips within just a short range because it has piplets attached to it. I hope you understand that. Now let's go to the next concept and let's understand how to calculate the value of pips. It's gonna get a little bit cranky and hectic, but I need your utmost focus right here. So as each and every currency has its own relative value, it is necessary to calculate the value of a pip for that particular currency pair. In the following example, we can use a code with 4 decimal places. For the purpose of better explaining the calculations, the exchange rates will be expressed as ratio of Euro USD, for example, at 1.2500, or to be written as 1 euro equals to 1.25 Euro USD. Remember guys that we have a base currency and a code currency. I taught it on the other episode. So we say the base currency is what is being purchased, right? The code currency reflects how much it costs. So the exchange rates that you see on your chart, on the right hand side on your chart, it's how much it costs to purchase 1 unit of a base currency. Okay, so for the example number 1 that we're going to use, we're going to be talking about USD CAD, and of course we can see the exchange rate there for CAD is 1.0200. So what are we trying to do? We're trying to find out how much is it in our base currency. And how to do that, basically we take the value, or rather the value change in our base currency, or rather in our code currency in fact, times the exchange rate, which is equals to the pip value, in other terms, of the base currency. So what do I mean by that? We're going to take basically the pip value of CAD, times it by $1, times it by the exchange rate of CAD. So you can simply just cross out the CADs there, and we're just gonna take the exchange rate, times it by $1 US, then it will give us exactly how much it costs. You can take your calculator to prove this, and you can see there that's about 409804 USD per unit traded. That means per interval. That's the actual USD. Now we want to go to another one here where we have Gdp Jpy, and as you can see, it's a different example there. We have 123.00. So basically what we want to do, as you can see, for the Japanese yen, it's just 1 or 2 decimal places. That means that one move would be 0.01. Okay, so the value, again, we want to take the value in change of the counter currency times the exchange rate equals the pip in value. So what we do, we just cancel out the other ones. We want to take 123.00 times by £1. It will give you exactly how much per pip it will be equals in pound. And what you simply do as a trader, when you've discovered how many pips is equal per pip, you times it by the number of pips, then you get exactly how much you make in that trade, or how much you'll lose in that trade. Hopefully it wins profits rather than how much you will. But it's always important that we get to understand how much you will lose, that when you lose, it doesn't hit you by surprise. Okay, now we want to really find out the gain. We want to get to the next level where we actually find out, because we're not trading with the same currency, hence we're not all watching from the same country like South Africa, and that of course brings a bit of a differentiation there. We have others trading with the US dollars, we have others trading with the ZAR, we have others trading with CAD or AUD, or even the New Zealand dollar, depending on what broker, of course, they allow you to use per currency. So what we do in the final question we ask when figuring out the pip value of your position is, what is the pip value in terms of my trading account's currency? After all, it is a global market and not everyone has their account denominated in the same currency. So this means that the pip value will have to be translated to whatever currency our account may be traded in. And this calculation is probably the easiest of all. We simply multiply or divide the found pip value. Okay, so the found pip value is what we're doing there when we're trying to find out exactly how we do it, like what we're talking about here. This would be the found pip value in your base currency. So you take the pound pip value of whatever currency that you're trading for its base currency, and you're gonna just times it by the exchange rate of your currency that you're trading in. So here we go into a bit of another one here that we talk about. So using GDP USD above there, where we have 0.813 GDP pound to the pip value in USD. So now we want to find out, if you're trading in USD, what would it be? So it's simply like you're trading GDP USD in a way. And of course, you can take the exchange rate there to the pound. So that will be 1.5590 as an exchange rate ratio. If the currency you're converting to is the counter currency of the exchange rate, all you have to do is simply divide, and then of course you will find by the found pip value by the corresponding exchange rate. So we take that 8.3 GDP pound value, times it by, of course, the exchange rate of the US dollar, then comparison, of course, to the pound, then we're able to find out exactly how much it will be in your currency that you trade, how much it will be. So in this case, it will be 1.2674 US dollars. Okay, so for every 10 or for every one move in Gdp Jpy, the value of 10,000 unit changes by approximately 1.2 US dollars or 27 US dollars. And of course, if the currency you're converting to is the base of the comparison of the ratio, you simply multiply, so it's more. For example, now using the USD CAD above, we found that it was 0.7900 as the conversion of the ratio. Let's take it and say, of course, so we can just simply take that and say 0. And times it by the exchange rate of the US dollar compared to the NZD compared to the US dollar. If you're actually trading in the US dollar, we times it, we are able to get or to find out exactly per interval there how much it will be, and we can see that is simply 1.2405. Okay, even though, guys, this may sound a little bit hectic, what Forex or what other brokers have done, they've simply helped to make sure that we can have calculators that help us to be able to calculate all of this stuff. I'm a bit dark, guys, I don't know why it's doing this, but hopefully I can get the exposure right as I'm talking. But anyway guys, hopefully that this video has added so much value to you, and of course you can subscribe, like, and share this video with your friends and family. God bless you. Thank you for watching this episode.